Right. Hey there, everybody. Good morning, good afternoon, good evening, depending on where you guys are at. I hope y'all had a wonderful weekend and start to your day with the market. Hey there, Mark, Lorna, Ricardo, Mirza, Jill. Great to see y'all. Good morning, guys. So let's go ahead and dive into what the market's currently looking like. We'll see if there's anything that we need to be a little bit cautious of going into this week. And of course, see if there is any trade ideas starting to set up that we might want to participate in. Hey, Phil, Thomas, Corey, good to see y'all. So, starting with SPX this morning, we had a slight gap to the upside, ran up into intraday resistance levels. We're just a little shy of tagging the 30 and ATR trailing stop. We basically were just a little shy of that 4,400 level. For those of you who have been following along with me for a while, y'all know that sometimes what happens around those big psychological levels is we'll get close to it, not all the way there, and then pull back the other way. Other times, sometimes we'll tag it exactly or we'll get slightly above it. That's how the market makers like to get a lot of stops out of people. And then ultimately, it still ends up pulling back. So in this case, we were just a little bit shy of that 4,400 level, sold off, made a bearish divergent bar. So that gave us the possibility of following through with some sort of lower low. SPX has technically already followed through with that and is bouncing some. Now, the reason why we could be slightly bouncing and stuck here is one, we are at some smaller time frame intraday support levels, right? So those are attempting to hold as we kind of chop here. But two, and I would argue maybe a little bit more importantly, is the fact that momentum on the hourly chart is starting to reset from bearish exhaustion, right? Let's zoom out of this for a second. So you can see momentum actually adjusted the axis lower. We got down to the bottom of the axis here, and then we started to get some green bars going into Friday. So that was a clue that we might be finally at some hourly exhaustion, which in turn means that we could either get a bounce up and or consolidation. And so we got a little bit of a combination of both, right? We've gotten a pullback move and now we could start to enter that consolidation phase where we're not quite breaking above 4,400, but we're taking a bit of a breather here, right? We're allowing things to reset. And if we start to cross above the zero line and of course start to break above resistance levels, then that's a good sign that on the daily time frame we might actually be attempting to turn around. And we'll take a look at the daily chart in a second. Otherwise, though, if we continue to trade below 4,400, if resistance holds up and we reset towards that zero line and have a similar situation like we had here where we either don't cross above it or we barely cross above it and then roll back down, that will be another bearish trend signal. And if that happens, especially if it lines up nicely with the compound breakout tool, with the squeeze, just like we saw last time on the hourly chart, that could actually make a great entry for us to get back into the bearish side for at least the next, couple of trading days. So for my intraday traders out there, I would say be a little mindful of today. Normally, when I see a move like this in the market, where it pulls back nicely into resistance and it fails to break above it, usually that's a re-entry to jump into the short side. But our clue to be a little bit mindful of that and maybe either do something like a call credit spread to really benefit more from the chop and the theta decay, or just to maybe just sit on our hands and be a little bit more mindful of our risk, is the fact that momentum's trying to reset. Now, if we get some red bars popping up before we can get all the way to the zero line, that might help the bear side out. But currently, this is still in the process of resetting. Similar situation right now with NDX on the intraday charts. This is also another one I'm keeping an eye on this morning. So we, of course, had this great sell signal with the momentum, bearish signal, the compound breakout tool, the squeeze, all of that, along with the pullback, gave a great re-entry to play this to the downside. We reached exhaustion levels on the hourly chart, so we're starting to pull back. We canceled out of our bearish signal on the compound breakout tool. That's a pullback signal currently. And we've bounced up, and here we exactly tagged the 30 and ATR trailing stop, held it, made a bearish divergent bar. Now, this bearish divergent bar in NDX is technically still valid. So, ideally, at some point today, if not tomorrow, we should see a move back down to or below the low of this hourly bar, aka the low of the day so far, which obviously wouldn't need that much to happen, right? Given the current range. But once again, just be mindful. You can see on the 5 and 10 minute chart, we're at intraday support levels, and similar situation with the momentum. We're in the process of this resetting on the hourly chart. So we could be in for a little bit more chop and consolidation over the next day, potentially two. On the daily chart, so a few things to point out here. One, I guess before I really zoom in, notice that there's plenty of room from a momentum point of view on the daily chart for this to continue lower, right? So even though the hourly chart's getting a slight reset, the daily chart still has a lot of room left for the bears to take this to the downside if they want to. The next thing I want to point out here is our Bollinger Bands, of course, are still flaring open. So they're still anticipating that potential move lower. And we, of course, have room to go down into the 100 period simple, which is currently also right by a very nice psychological and price level, which is 4,300. So that could make for a very nice target to play to the downside. And of course, I don't know if I'd play much past it at this point, but certainly a test around that range would not be out of the question. Depending on how we go into the close today, we might also make a bearish divergent bar. So a bearish divergent bar, of course, in an overall bearish trend would have, and I wouldn't call this a bearish trend, but obviously it's not that nice bullish trend we had back here. So usually a bearish divergent bar in a situation like this would have me, playing it to the downside, following through with that lower low. But one thing, once again, to just point out and be a little mindful of is we do technically have back-to-back divergent bars. So that could be also another sign of chop and consolidation. So once again, if we do take this trade, or if we were to put on a trade for today, right off the intraday, I doubt there's any premium today, but let's go ahead and price it out. I'd say basically something along the lines of this. This is an unbalanced butterfly. I'm not a big fan of the premium that it's currently showing. So maybe if we can get a bit more of a bounce, but resistance holds, we could look at putting this on for today. But this is an unbalanced butterfly. So it's basically a standard butterfly with an extra contract on the credit spread. And so you can see naturally when you put the strikes in that order, you typically order it for an overall net credit. And the idea here is we hold at or below 4,400. If we're below 43.95, the premium that we took in on this trade, right, the credit that we received would be our locked in profit. If we bounced up to 4,400 but didn't break above it, right, we stalled at the short strike, which is that nice psychological level. It's right where that intraday resistance is that we kind of talked about. Well, if that happens, then you actually have the max profit potential of the credit you received plus the spread width, which is 5 points. So in this case, if we opened it for 30 cents, 530 is our max profit potential. The risk on this trade is if we really did continue to break to the upside, right? If this was just a slight pullback, we bounce and then we continue past 4,400, then you have to be okay with the risk of around 470 if you got that 30-cent credit here. So might be a case of, one, maybe if we base this off the daily chart and we're looking to play it into tomorrow, we go out an extra day, right? Go out to tomorrow's expiration. That certainly gives us a much bigger credit to play off of, right? Let's say we get filled at $1, just to make math simple. So we get $1 credit here. It's a $6 max profit potential if we hung out at 4,400. And then if we broke above it, right, then it's a $4 risk, but not a bad max risk versus max profit. And of course, the premium looks pretty decent, being roughly 30 points out of the money, to where if it just remains out of the money or we continue to drop down, the theta decay should really work in our favor on this trade. Now, personally, if I was opening this for tomorrow's expiration, I mean, arguably you could jump in now. It does look like this rollover move could be starting to happen here, right? So if we do roll down, 43.60 is definitely going to act as a price level. If we break below that, 43.50 is going to be a mini psychological level. And then, of course, 43.40 to 43.35 to the lows that we had Friday. So could start to roll over back into that range. Once again, chop, right? Even though this, from an intraday perspective, would be a move down, chop can still allow the momentum to reset. So if we do roll over, I don't know if I'd play much past 43.40 or the lows of yesterday, right? That might be the bigger target to the downside. Um, but if we got down into that range, stalled, and then bounced and kind of hung out here, that would still allow momentum to reset. So, just be mindful of that. That being said, if I were to, like I said, take this trade with tomorrow's expiration, I might wait for confirmation that this bearish divergent bar is going to print, right? And arguably, with the bearish divergent bar, if we give it the 3 bar rule to follow through on, you could arguably take this out to 3 days from now, so August 24th. That gives you a much better credit, much bigger max profit potential. It certainly reduces the risk. The downside of this, of course, is you'd have to sit on it potentially for 3 days to let that theta decay really work in your favor, unless we get a stronger directional move down to help out with the theta in that case. But that might be another trade idea, actually. That I kind of like the credit on that too. So if I personally were to put this on, you could look at doing it same day. You saw the premium wasn't that great though. Uh, if you're looking more for an intraday setup. Otherwise, though, if we're looking at this based on the daily chart, let's see if we can get the bearish divergent bar to print and this weakness still in the market. And if we can, then this might be one to consider trading either for tomorrow or over the next couple of trading days. As of right now, though, given how the market looks, I would be anticipating a move down closer to 4,300 to test that. Now, it might be a case of where we test the lows that we had on Friday, which are 43.35, right? We get kind of close to that range and then it chops. That would allow the 100 period simple to catch up with the price. And then we might find ourselves going into a wedge pattern where the 10 period simple, which on this downturn has been acting as resistance. You can see that here and back here, here, as well as here, right? That's been the current resistance level on the daily chart. So could be a case where we hold that as resistance, we maintain the 100 as support, and then we start to get into a little bit more of a narrow wedge situation before we either break to the upside and the bulls win, right? And we try and get a stronger reversal back up to 4,500 or higher, or the 100 period simple breaks and we get a stronger pullback to the downside. For those of you who may need a refresher on this, or maybe it's the first time listening to me, just to be mindful. The weekly chart is at exhaustion. So just like we're talking about with the bearish exhaustion on the hourly chart, the same thing is true with this bullish weekly exhaustion. We either need the price to pull back, right, to allow that to get a proper reset towards the zero line, or we need it to consolidate, which would still allow momentum to reset. So once again, this 4,300 level on the daily chart, right, where that 100 period simple is, I'd certainly be mindful of. But if we break below it, the next target to the downside, I would argue, is between 4,250, 4,200. That's right where this cluster of weekly support is. It would not be out of the question to go down and test that. If it holds, right, that would make an excellent buy-in spot for us to then come back in and try and play for a bounce to the upside. Currently, momentum still in the process of resetting. We still have a pullback signal on the weekly chart that's valid. Bollinger Bands are in consolidation, right? The upper Bollinger Bands flattening out, the lower Bollinger Bands coming up to meet the price. So all of that is a bit more of a clue of chop here going forward. And of course, chop, but in a much wider range, which means we have room to potentially play down into these support levels that we're talking about here. So that's what I'm seeing on the daily chart. I would not be surprised if we sold off a little bit more, at least early in the week, and then maybe consolidated some. And then if we break the 100, I would anticipate that selling to then take us into that weekly support range. And then we can watch to see whether or not that holds. As for events coming out this week, let's take a look here. Bring up our market calendar. So on the schedule, there's nothing for today on Monday. Tomorrow we have a Fed speaking before market open. I wouldn't anticipate that to do much at this point. Some existing home sales, so that can move a tiny bit. We do have PMI on Wednesday for manufacturing and services. So that could be something along with new home sales. That's a little bit after market open that occurs. On Thursday, we have another Fed official interviews. May or may not move the market. Once again, the Fed hasn't, unless it's like an actual day of event for the Fed announcement. And I'm not even talking minutes, right? I'm mainly talking about an actual event where they're talking about a rate hike or a rate cut, then Powell gets on the mic to answer questions of the press, right? Outside of that, we really haven't seen much volatility from the Fed this year compared to what we saw last year. And even on the days where it is one of those Fed event days where Powell's going to be on the mic talking, it maybe causes some intraday volatility, but that volatility, at least from what we've seen this year, hasn't really lasted or followed through, right, into the next trading day or certainly into the next trading week. So, we can point out that they're talking, but I wouldn't anticipate that to do too much to the market. However, on Thursday, we do have jobless claims. And so that might be something because as we know from Powell speaking, which I mean isn't surprising, this narrative really hasn't changed. But of course, he's saying we're very much data driven, right? And so people are looking at these reports like jobless claims, like CPI, and they're kind of hoping that it gives a hint of what the Fed may or may not do, AKA, will they do another rate hike or will we get a pause next time? And so, that might be a little bit more of a market mover. Uh, but to me, there's not too much coming out this next week to make me think that the market's really, we really need to be cautious of, CPI. Like last year, for example, we really needed to be mindful when CPI was coming out because it was a huge market mover for what we saw. This year, not as big of an event, right? And the events that are currently coming out this week, I wouldn't put as much weight on them really causing the market to get a big move. Now, what could get the market moving a bit, or at least maybe a certain index, is we do have things like NVDA earnings. Right now, NVDA isn't necessarily a FANG stock, but it is, one that has done excellent this year, that has had big swings around their earnings announcement. And that is on the 23rd after market close. And the reason why I bring this up is because we could, depending on how the market reacts to this announcement, could get a bigger move up or down within the cues. A great example is on SMCI, which had earnings last week. This one fell, right? It dropped way down. It was at 350 and then it basically was just shy of 250 by the end of the day that it announced earnings. So big big drop to the downside. And of course, this affected NVDA last week, right? It dragged it lower. So the question is NVDA going to have a similar move where, maybe it's a sector situation that's happening that's causing this drop? Or is SMCI kind of like a solo case and NVDA does what it's done the last few earnings, which is get that nice gap to the upside and kind of help prop things back up? So I think that could certainly affect things like NDX and, of course, the Qs on what might be happening a little bit. The Qs will load for me, right? What might be happening a little bit later this week. But otherwise, from a market perspective, if we get this bearish divergent bar to print, I would anticipate maybe a little bit more bearish sentiment to the downside going into potential consolidation, just with how some of the intraday setups as well as the weekly setups need to reset on their momentum. So, what does that mean from a trading plan for us, for the account, right? Well, for myself, I wouldn't actually mind playing MVDA earnings, right? Maybe putting on an earnings lotto style trade through the announcement. That might have some benefit depending on the risk versus reward there. So that's certainly something to take into consideration. But I also wouldn't mind for the account this week, keeping it a little bit more even on bearish and bullish trade ideas, right? Maybe have a couple of things where if the symbol's looking a bit more like a honey badger, right? It's been ignoring the market, it's been doing a good job of holding up. Maybe getting a few of those symbols into the account, as well as some things that aren't doing well, right? Like XEL. This has been in a nice bearish trend. We had the rollover here. I know we've already played this in the small account mentorship, so I'm not claiming to play this one again, right? We've already seen the move happen. But finding setups like this from a bearish sentiment side, things that aren't even trading above their 100 yet. So that way, if the market is in fact trying to get a little bit more of a pullback and rollover, these things will likely stair step down with it. And of course, for us, we can take advantage of playing that on the put side. So that's kind of my game plan for the week. Try and keep things a little bit more even in the account, play, maybe an earnings like MBDA, and then otherwise looking for the intraday setups. I know we had some overall pretty good luck last week with these pullback entries to play. And so I wouldn't mind taking a few more of those this week, right? The benefit of doing some intraday trades is, especially if you're doing like 0-day expiration, you're not really holding that risk overnight, right? So the setup's either going to work or not work that same day. And then it kind of keeps you flat going into the next day. So that way you can do just what we did this morning, right? Reevaluate how the market opened, reevaluate what the daily chart looks like, and then take advantage of it. And of course, you don't have to be stuck always taking a bearish standpoint in this case, right? If we have an up day like we did Friday, we could always look to play the reversal move from an intraday chart perspective and kind of have that help us out, even if our daily perspective still has a little bit more weight to the downside on it. So that is what I'm looking at for this week. That's what I see for the market, guys. If you have any questions around that, please let me know, and I am happy to answer them. Uh, but otherwise, I don't know. This almost looks like it's gonna want to roll over here on the intraday. We have Bollinger Bands flaring open on the 5-minute chart. They're starting to open up on the 10-minute chart. And this is interesting to see, right? Because typically the Bollinger Bands usually start to flare open when the underlying price actually puts pressure on the Bollinger Bands, right? Like here, for example, we started to get that spike up and the Bollinger Bands got pressure from the underlying price and they started to flare open to the upside. But here, they're already attempting to open lower when the underlying price is way up here. Now, if we stay stuck here, right, if we hold on to support and stay stuck, then they'll likely flatten back out. But the fact that they're starting to open a little bit when the price is up here could be a clue that they're anticipating that reversal to happen, right? They're anticipating that drop. And so they're already starting to make room for it. You could also argue that's attempting to happen here on the hourly chart. I'd say that's a little bit more speculative at this point. But notice how the Bollinger Bands aren't coming up to meet the price anymore. They're either going to start flattening out in this range or they're going to start opening lower. And notice what level that's at with the lower Bollinger Band here, right? That second deviation Bollinger Band, that's right in line with the lows that we had for Friday. So same range that I talked about at the very start of the session. But it could be a clue that if we start to break these smaller intraday support levels, if we can break back below the 10 period simple on the hourly chart, that might be the trigger for you to jump into something. Then it looks like the Bollinger Bands at least are giving you that room to potentially play all the way down into that 43.40, 43.35 level and still stay within the comfort zone. And of course, if we break that, then we know that this was a potential pullback rollover move. Will likely cancel out of the pullback signal on the compound breakout tool in the hourly chart and get back into a potentially more bearish or consolidating signal like we see on our smaller time frames. And we could start to get those red bars to pop up early on the awesome oscillator. Now that's not happening yet, but of course, if we start to break, could be a possibility as well. And yeah, Shiny, how would I play the VIX? Let's pull it up really quickly. So the VIX right now is trying to get a little peak above the 100 period simple. You do see the Bollinger Band starting to open up. If I were to play this to like a certain target to the upside right now, knowing what the markets look like in regards to the support coming up, I'd probably say 20 would be a good target. That's been a price support level, price resistance currently. And of course, it's for the VIX kind of a psychological level. So you could arguably look to play it up like that. Now, personally, I don't like trading just the VIX by myself. I think you can play the indexes and there's a better risk versus reward scenario. But one way, if you're ever wanting to do like a long term trade on the VIX, one way to go about doing that is to do some sort of diagonal or calendar, right? So if you kind of wanted a long-term hedge, maybe your account's a little bit more bullish. So you want that insurance just in case volatility sneaks its way into the market, surprising you, right? One way to go about doing that is to go out and give yourself time. So go out to December end of year, you could go out to January next year. And the idea is you jump into a long call, and let's call it like the 15 call for right now. So you can see that's around a $5 cost basis. Let's just call it 5 for simple math here. And so you could have this as a long-term hedge to play out there. You might be asking yourself, well, Allison, that's nice, but obviously it's nicely in the money, so it has some intrinsic value and everything else. But what do I do about this in the meantime, right? It's just kind of sitting out there. Well, in the meantime, if you're not, I don't know if I'd do this necessarily today, mind you, because right, the market's still selling some. But if the market looks like it's pausing, it's going to reverse, and you still want a longer term hedge. Basically, you could go out here to a short dated expiration and sell to open a strike against it. Notice how this is technically a capital positive move for your account, right? So it should be. I don't know why it's showing the cash buying power as more. Um, but technically, it should be reducing your risk in the sense that you are selling a short strike against your long strike. And so you can collect premium off the short strike with the idea that the VIX it could get up to 20, but it's not going to break above that level short term. And then you take the premium off that. Ideally, you let it expire worthless or you close it for a small win. And then basically, you could go out further in time and then resell to open a new short strike, right? And so what that should do is allow you to take the premium short term while still holding it the bigger longer term hedge out here. One that helps chip away at the cost of your hedge, and two, if it looks like we are starting to get some really stronger selling in the market, right? Then of course you could close out your short and let that long work in your favor if we start to anticipate a bigger spike to the upside like we've seen. So if you ask me how I would play the VIX, that's probably how I'd go about doing it. Is I'd have a longer term hedge out there and then short term sell to open some premium against it and lock in a profit that way. But that is my time this morning, guys. So thank you so much for joining me. I hope this kind of helps you out, maybe helps solidify what your game plan is going to be for the week for trading the markets. For those of you over on Twitch or YouTube, I will be back on. Hey, Fabio, I just saw your message there. Uh, yeah, is HG Cooper is. Let me know what the symbol is for that because I'm not sure, but I'm happy to give 2 cents on it. And yeah, so shiny, that's a great way to do it. So short term, double check because it should be a capital positive move for your account. I don't know why when I'm clicking on a short strike here, it's bumping up the cash buying power. But typically, turning something into a diagonal or calendar is a capital positive move when you sell the short strike. So you could look to do that short term while waiting potentially for that bigger move to happen. And then Fabio, I don't know what HG Cooper's symbol is. Is it just HD? Thanks, Shiny. Let's pull up HG. HG, maybe it'll pull up if I type it in. Doesn't seem to want to. Oh, I'm saying Cooper. It's copper. HG. Oh, no worries. No, that was my dyslexia more than anything else. Let me see if I can Google it really quick. So CMX, maybe? Is that it? Let me see. Nope. It's just copper we're looking at. We could always just HG1. Thanks, Corey. Appreciate it. You can see how much I look at this symbol, which is like never. But that didn't pop up either. Hmm. Well, here's copper or a copper. I don't know why that's not popping up on my charts. I personally don't look at metals too much. I would say if I tried HG and that didn't pull up either. But this says it's copper, so we can take a quick look at this, which right now it looks a little bit more bearish, arguably. But I'm like I said, I'm not sure if that's the right symbol. Um, I'm just looking down the list here. But personally, who I would say to go and follow Fabio, if you have a second, is Neil over here at Simpler Trading. Neil does a lot of metals and things like that. And so he's usually the go to person here that I listen to if I'm ever planning to trade metals or want an insight into what that, market and sector is doing, if you will. So probably wouldn't be the best person to ask about it just because I personally don't trade it too much. It's HG1 on TradingView. Yeah, I'm unfortunately on we can oh, thank you, Non. Yeah, slash HG. Non to the rescue. Okay, perfect. So yeah, so it was kind of similar to what we saw a second ago, but basically from at least the technicals that I look at, like I said, I do not trade copper. But from what I see currently, we attempted to break above the 100 that failed. Usually when that happens, when you've been in a bearish trend, it's a place for bears to reload. So like here or here would have been a good place for the bears to reload whenever we attempted to break it, failed, retested it, and on the retest failed to break above the 100 again. That would have been a place to short. As of right now, we're going right back into the 10. If the 10 holds for today and makes a bearish divergent bar, this might give you another re-entry to play to the short side. However, few things to point out. One, back-to-back divergent bars can be a sign of chop, and that's what we've had the last 3 days. The second thing to point out is momentum has turned bearish, but is starting to give us a green bar. So if we get another day or two of a green bar, that could already be attempting to reset, which could also lead to either maybe another pullback move into the 100 or into consolidation. And currently, the compound breakout tool is still consolidation. When we pull this up on a weekly chart, my guess was going to be that it's in a wider range of chop, and it is. So, arguably you could look to short it, but as you can see on the weekly time frame, you have a big level of support here around 360. So if you were to play that daily sentiment shorter, um, that would be, a place to cut the trade if it gets down into that range and stalls. There's certainly some bearish aspects on the lower indicators, but we need a break of the ATR trailing stop to really get us a stronger pullback, maybe down into the 325 range that we saw last year. So I hope that helps you out, Fabio. And yes, there was, let me go back to the daily. So on the 15th, no, on the 15th, we had a bullish divergent bar. So this one was a bullish one. However, because the trend is bearish, it's a counter trend signal. So I wouldn't personally have taken that. I would only look to take the bearish divergent bars, which printed on the 10th. You had one print on the 9th. And then you had one print on the 17th, which technically got a lower low, but it barely happened. Made a bullish one on the 18th. And that one's followed through with the higher high now. But that's what I mean by back to back divergent bars like that could get a bit choppy. Of course, not a problem. And Michael, this will be the last one. I'll take a quick look at AMD, and then I do have to go take care of the kiddos. So AMD to me still has a valid squeeze. Momentum's below the zero line, has room to move lower. Still a choppy signal in the compound breakout tool. Might print back-to-back divergent bars. It attempted to break below the 100, but immediately is bouncing back up. So this is kind of the clue, right? It looks like it wants to fire to the downside, given the fact that it's still kind of holding that 100 as resistance with the squeeze. But a lot of this is still more consolidation. And so my guess would also be, here's the weekly chart here. So if it does pull back, you have weekly support right below you at 100. 100, of course, is going to be a huge psychological level, and we're trading at 106. So if we do start to move lower on the daily chart, 100 would right in that range, right? 100 to 102 would definitely be my target to the downside short term. And then if we can break that level, then maybe play the bigger move lower. But what I was going to say here is AMD, it might chop, right? NVDA earnings with how it goes with the Qs and everything else, that might give a little bit more of a bigger effect to how AMD trades later in the week. So it could be that we kind of stall here, chop a bit. And then once those earnings come out, even though they're not the same company, right? That could still end up affecting if AMD can actually maintain this level or if it causes a bit more of a break, right? If NVDA doesn't do good and drags down a lot of other things, AMD could be one of those symbols that it drags to the downside with. So that is my time, guys. Thank you so much for joining me. For my YouTube, Twitch folks, I will be back on the mic on Wednesday. So I look forward to talking to y'all then. As always, may the trade be with you, my fellow Jedis, and have a great start of your trading week.